Hello guys, thanks for tuning in and joining us to the channel. And today I'm super excited to present you our new guest for today's chat. So we have Ankur Pathak, Ankur Pathak from London Real Venture. So hey Ankur, thanks for stopping by here.
Hey Ivan, it's a pleasure to be here. I can't wait to get deep into our juicy content.
Okay, so that's nice. I like your intention. So let's actually cut to the chase. And from what I know, basically you represent like VC class. So want to tell us more about that? How did that happen? And how's it going for you right now?
Yeah, look, we spoke a little bit before how I transitioned from healthcare into now the VC world. This is what I do. So look, from the standpoint of the experience, it's been a beautiful experience. It's always a great learning curve. People always talk about the market being what it is today. It's actually the best time to be a VC. You get the best terms, you have builders who are going to be here for the long term. So we're pretty excited about where we are in the space, and we're looking to push forward.
And how did you end up to enter this VC world on your own, being first?
Yeah. So it's pretty interesting. Look, I'm part of a VC firm that's actually linked. It's actually the investment arm of a media company. So the firm is called London Real Ventures. The media is London Real. And I always say that the easiest way to describe the type of media is Joe Rogan, but more professional, more buttoned up. And so Brian Rose has been doing this for about 12 years. And so I kind of followed him. And he's had on some guests from all over the place, not just Web3, every sector, every vertical. And kind of fell into blockchain based on some of the guests that he had. And then kind of joined up with him through certain things that he had created, rose up through the ranks, and here I am today. So it was all organic. Nothing was ever planned in the process. So I kind of fell into this and love it every minute of it.
Okay, so that's amazing. So my first question here from this VC terms is something like, how does VC funding differ from other forms of fundraising in the Web3 space?
Sure, yeah. One of the most common ways that startups in the Web3 space will raise funds is through tokens, right? They'll do a token sale, they'll do some sort of sale. And so that's primarily how they raise their capital. Or they could do some crowdfunding as well, which is no different than the Web2 world. Same thing. VC funding, what's different about that is that, first of all, it's usually much more in terms of the check size. Right? It's a much bigger amount that's going to come in. But also on top of that, you're going to get people who are seasoned in what you are trying to do and to guide you along the way. When you do a token sale, when you do crowdfunding, all you're getting is money. You're not getting any guidance. You're not getting any connections. You're not getting anything with that. So in the Web3 space, especially when everyone thinks we just need money and we'll be okay, a lot of the times you need much more guidance to get you to where you want to go, and less so on the capital aspect.
So I imagine you are in the game for a long time. So being like a true crypto professional so far. So I think a lot of things has changed since then. Like we all remember the boom of ICOs back maybe 5 or 6 years. So how do VCs handle this rapid pace of technological change and the competition in the Web3 space and Web3 environment, actually?
Well, it's actually funny you say that, because many of the VCs today are actually those who were in the space in 2017 or before. Right? They were investors, they made some money, then they went on and to join firms or create firms themselves. So most of the VCs, the Web3 native VCs that are here, they've been in the game themselves. So they're very used to the pace, right? And that's what actually helps them, or helps the companies that they're actually advising, because they understand the pace required to be successful. So the older VC firms, maybe the Web2 firms, are actually hiring on those who've been in the Web3 space. That's how they are able to stay on pace. But yeah, most of the firms you'll see around here now, they've actually just came from money that they made over the last 5-6 years.
So they are rather in for a long run rather than just like one spark thing that happened maybe in a boom 6 years ago or something, because we can clearly see now that things are actually way different from with what it was back then.
Yeah, look, anyone who's in the VC space and using their own funds or a group of them, they want to see the whole space push forward together, right? They want to see real utility. They want to see, maybe the next Amazons, the next Facebooks or Googles in Web3. And that's what they're here to create. So we're all excited to be in this space. We know we're just scratching the surface. So why wouldn't we want to be here for the next 10, 15, 20 plus years?
So in your opinion, the majority of VCs are not like a turn black eye on the crypto and are still in the game. They're not turning back to like traditional ways of investment. So they are rather staying here.
They're here. They just become more strict on what's required to invest. So it's actually the entire space is maturing. Before it was just, hey, we have a token, everyone's going to throw money in because it's a token play. But now it's about, hey, are you generating revenues? What's your go-to-market strategy? Are you solving a real problem? So it's actually, that's why I mentioned in the beginning that being in this market now, this bear market, is actually a good thing, because it's weeded out so many of the players who couldn't sustain an actual business. And now VCs are getting in tune with, look, we got to pay more attention, and we can't just keep throwing money at something that's not even solving a problem.
Okay, I think we'll talk about this later, about the future, maybe a super close future that awaits us soon. So my question is, what are the most promising areas within Web3 space that you believe deserve VC attention now?
Yeah, look, I could probably rattle off 9 or 10 of them, but I'll stick to 2 of them here. First one is gaming.
Still GameFi.
The problem with gaming and Web3 has always been great economy, right? But bad user experience, bad user interface.
Or vice versa, because sometimes it's great playing, but super bad economy.
Right, but they're trying to do both at the same time and not really seasoned in either one of them, right? What's nice now is that you are getting developers from EA Sports, from Unity, all of these who are experienced with creating big labels and big names like Call of Duty and Sony and, you know, all these guys, Microsoft. They're coming and they already know how to make a proper game. They know how to build an audience around that game that is a legacy game. But now they're adding in the blockchain, the technology portion of it, the economy portion of it. And so that's what's really exciting now, is that you're getting that perfect marriage between the economy part of it, but also the gameplay, which is really what players want. If you make the game a job, it's not fun, right? And people are playing this game to escape their job for the most part. So why would you want to make that all about make money? So they've done it now in a much more seamless fashion. And we have a couple projects right now on the go that are complete game changers, and we're pretty excited about that. So that's number one. Number two is the creator economy. And when I say creator, you could say influencer, you could be athlete, you could be an artist, a musician. The problem in today's world is that they don't have the ability to engage with their fans the way that they want, and vice versa. The fans can't engage with them. And so this entire industry is ripe for disruption. It's already happening, you know, kind of behind the scenes. But this is what really gets us excited, because you're able to provide a much better experience for the fan, which then makes it much more better for the artist or whoever's controlling that community.
Something reminds me of a platform that's been popping up lately called FriendTech. I think you're aware of that. So I think that you described actually their tokenomics or their functioning model.
Yeah. Look, I mean, decentralized socials. That's a thing. Look, at the end of the day, creators are having a problem with owning their own content, right? They're on platforms.
Indeed,
they could get turned off in a heartbeat, right? Fans, they can't really do much with the experience that they have with those creators. So if you can fix on both ends of those, the sky's the limit. So both of those areas right now are popping off quite a bit.
Because actually, I still remember the words that have been popping up when GameFi was just getting started. So it was all about, turning control to players, like owning things, but we know that in what it turned out to be. So don't you afraid that this Web 2.0 could be the copy of actually the previous thing?
Well, I'm always looking for Web 2.5, right? Because I think Web 3 is too big of a jump for many players, because what ends up happening is the conversation is always around the technology. Do this, own this, make this money. The conversation needs to still be about the gameplay, the experience, right? So if it's a gameplay, but otherwise, it doesn't matter what platform, doesn't matter what you're using. It's your experience that dictates, are you going to come back, right? And so if you focus on that, but you're layering in all the benefits of having blockchain, where you can own your own assets, where you can engage with someone on a much better level or deeper level. Those are the things that you do. But if all you do is stress the tech, nobody's going to come. You and I are having this conversation over a video call. I don't care how it works. I just want to make sure that it works. That's all I care about. And I think that Web 2.5 version, that's really where the key is right now.
Interesting. So we actually remember that there were a lot of overhyped project back then in GameFi 1.0, whatever you call it, or something. So how do you distinguish Web3, genuine Web3 projects, their innovations from like other overhyped projects?
Yeah, look, I mean, that happens in every market, right? For every, like you look at AI, you look at Web3.
So what is your way?
It's always the ways to look at, first of all, deep diving into the team itself. Is their experience in building whatever they are building, right? So when I mention gaming, and then I can look back and see that you and your team have created Call of Duty, Assassin's Creed. Okay, I know you have experience on how to create a game, right? Outside of that, who else is invested in you? That's always one of the biggest things. Can we speak to them? What is it they like? What are their concerns? That's all part of seeing what is actually under the hood versus here's a deck, here's some hype, let's throw some money. And that's really what it comes down to. Is the valuation reasonable?
Very immature.
Looking into the financials. And I think, like we talked about before, it's no different than what they do in Web2 investing, right? They do all these things which we forgot in Web3 or didn't care for. And so now bringing that in, the whole space is maturing.
So your number one factor is obviously the team. So continuing this, like your due diligence process describing. So can you explain your due diligence process for evaluating a Web3 project's potential for investment?
Yeah, absolutely. I mean, we always look at the team, as you mentioned, but then you look at the tech, right? You're going to look at the traction that's involved. So that could be socials, of course, but like I mentioned, what other investors are involved? What other founders? Who is speaking about the project? What's the community like around the project? Right now with Web3, you've got a little bit of different of wrinkle because you're looking at tokenomics if those are involved, right? What's the token release? How is that going to play out? And then what are the terms for those token releases as well? So from a high level, I mean, we've got analysts involved. We're speaking to all the investors involved. We're having interviews with the team. And that's really how our due diligence is going to run. Throw everything else out. There's a very popular saying that says, we don't bet on the horse, we bet on the jockey. That's exactly what we do. If we can establish a good feel for the team, the product may look different in 6 months. We just want to make sure that this team is most likely to make the best decisions to pivot when needed.
I think that's an interesting saying, when you make investment decisions, so always, look for a jockey rather than a horse. So interesting analogy, so to say. I think, our viewers really like that. So my next question is rather about investments. So considering this side, can you give examples of past Web3 investments that were particularly challenging and how they were handled?
So when you say challenging, what do you mean by challenging?
Well, maybe there were some difficulties throughout the way of investment and maybe some, setbacks along the process. So what did you learn from that experience?
Sure. Yeah. Well, it's always interesting. So our firm started around early 2022. That's when we started. So we were still everyone was still feeling good. Valuations were still sky high. Everything was still happening. Money was kind of still flowing. And so as a new firm, if any of your listeners are investors or trying to get their feet wet, one of the hardest things to do is to get people to pay attention to you when you are new. So when a project is hot, how do you get them on a call? How can you get them, understanding what is it that you provide as a value add? I would say that's the most challenging part when you start. In terms of the actual investment itself, there hasn't been really any challenges there because we do our due diligence before we invest, right? So the challenges, they're going to be reduced as it is. Now, could they happen down the road? Absolutely, they could. But for the most part, it's pretty seamless once we have both decided we're in alignment and we just move forward.
So how did you manage to, to resolve this situation of being, found out by other people?
You know what? Persistence. I know it's such a common thing to say, but you kind of have to be at it. And I will say now as a tangent, for anyone out there, founder or investor, I don't care who you are, you need to build a personal brand. The more you have a brand, the more people heard about you, seen your content, the easier it is for you to get in touch with people that you want to actually speak to because they already know your thoughts and opinions. So that's kind of what I did, was just to create a bigger network. And so I had different angles to reach the people that I wanted to, even if it wasn't directly through me.
So it was mostly through persistence and maybe some personal contacts in your
100%.
Contact list.
100%, because you can't be the one that continues to say, let's get on a call. At some point, they're gonna be like, you're bothering me now. So you gotta have different people in between who they trust that you can lean on to do that for you.
Okay, so speaking about the investment side next, so what's your track record in terms of successful exits versus like failed investments in the Web3 space?
Yeah, so like I said, we were in 2022, we started. So right now there have been no exits. No exits, nothing has failed. Everything's pretty good right now. And look, I will say this, being in Web3, we started off with the mentality that we only wanted to do token raises, or primarily. But as soon as the market turned, projects automatically stopped doing token raises and they went to equity.
Yeah, it was a harsh time actually entering the market. So 2022, the beginning.
Yes.
Yeah.
Yes. And it only got worse. And it only got worse, right?
Yeah, I feel you.
But that actually worked in our favor because we have a 10 plus year mindset. We're not looking to dump tokens. We're not looking for the next 10 months. So we're okay with equity. And then what ended up happening? Well, now the market is a little bit better. Now you're getting those who are offering equity and token plays together. Whereas before they would only offer tokens. So when the market changed, now they're okay with equity, but now they're also okay with tokens. And so as an investor, you get the best of both worlds there.
Okay, so how did you survive this harsh time, like 1 year, 1.5? Was it?
Yeah, well, it's harder. It's much harder for the founders than it is the investors. Let's put it that way. Look, I would say that the hardest part the hardest part of, as an investor is maybe the deal flow is less. Maybe the quality of deals that are coming are less, right? Because savvy investors know it's not a good time to raise. They might pause it for a little bit. So you're not getting the same amount of flow. You just kind of have to go through the repetitions to find them.
And during this time, have you like invested in Web3 project that turned out to be a complete disappointment or a scam rather?
No, I can't. No, thankfully
Good for you.
But I'll tell you why that's the case though. So most VCs, the traditional model is we're going to invest in 100 companies, 50 companies, 75 companies. We'll put some money here. If you fail, no problem. We have a bucket load of other, projects to win.
So it's 50 plus companies to be invested in.
I mean, it varies depending on the size of the fund, right? But if the bigger the fund, the more projects they actually want to have in their portfolio.
And super diversified, right?
100%, right? So if one becomes a scam or they didn't run it properly, they're still okay. But for us, like I said, we're a media platform. We bring our founders on the platform. We have about 5 million plus subscribers and about 1 billion views in content. We are tying our brand directly to the founder. So we cannot be free with our capital and be like, we'll invest in you and take a chance. We'll invest in you and take a chance. And then you don't exist in 6 months. So we're much more diligent and cautious when it comes to investing, although we are active. We're very picky. So we're not after, hey, I have an idea on a napkin. I'm in my garage. I just need 100K. Help me out. We don't do those deals. So that's kind of why I would say there's less opportunity for that to happen to us than to most of the VCs out there.
So I'm really curious, do VCs have their own vision on the project that they are invested in? So can they like propose the direction of, that the project should go? Could there be any disagreement between like a project and a VC in terms of the direction they are sharing?
100%. I mean, that's a common problem. And this is one of the reasons why founders are very hesitant to raise money, right? Especially a significant amount. The less control you have, the more you're going to have to answer to somebody, right? This is also why founders like to have a variety of investors, not just 1 or 2 big investors that come in, because now they have the control, right? They're dictating kind of where you go and how you behave. From our standpoint, we're just trying to add value to a team that's already running smooth. We're not trying to be involved and say, do this. But I will say on the flip side, sometimes founders are blind to where they should be going. And so when they're told to go a different direction, they don't like that.
And so how did you handle these situations?
Yeah, look, I would say for the most part, we've got great relationships with them. They understand where we're coming from. We understand where they're coming from. And we're not trying to push anybody to do something they don't want to. It's about giving them a different perspective. So maybe they're open to an idea that they haven't seen before. And then we just go collectively. The whole point is to be a team, right? We're not trying to get into a project to take it over. We'd rather not. So we just want to work as a team. So whatever we need to do to make that teamwork happen, that's what we're trying to do.
So generally speaking, in your vision, what do you say, like, who has the most power over the project's direction, VCs or the original team?
Well, I'll say this, whoever's if the project is doing extremely well, it's the founders, right? Because I want to make this blanket statement. VCs aren't trying to get into projects where they control. They'd actually rather be hands off, right? They're not trying to change the flow of your journey if you're doing well.
Quite logical, yeah.
Yeah, right.
Change something into the project, you just become developer rather than VC.
Right. Now there has been some times when the VC decides to do something that maybe isn't the best for the project itself. Of course, that can happen. But I think the majority of VCs, I mean, like I said, if they have 100 companies or 50 companies, they're not trying to control all of them. They would rather you do well and they do nothing. That's what they would rather do.
It was too much attention to be paid to, like hundreds, more or something projects are along the way.
Yeah,
that makes sense.
You look at Animoca, which is a very popular brand. They have about 720 or maybe 450 companies in their portfolio. There's no way they can try and take over every single company and try and control the direction. So I would say,
how many do you have now?
We have around 12 now in ours.
12.
12. So again, we're very selective, but very active over the last 2 years anyway.
And not, naming names, but just in what, from which sectors they come from.
Yeah, look, I mean, I can even share names. I mean, we do interviews with them and post it on our platform.
Okay, fire away.
Yeah. So there's one that's called Orange Comet. They're heavily involved. They're Hollywood producers and whatnot, and bringing the Hollywood storyline and graphics and digitization into the Web3 world. So they've got, relationships with those like Walking Dead and very big brands like that. And so they're kind of bringing those, traditional brands into Web3 space. We've got some other ones that are more B2B. They've done things with FIFA, with Frito-Lay, State Farm Insurance. So more on that end, just to get B2B plays involved. So look, across the board, we've got NFT plays, gaming plays, you name it, we're pretty much across the board. Another one is called Swissborg, which is a pretty big exchange, and has their own venture arm as well. So look, for us, we are sector agnostic, geography agnostic. We don't care about what protocol you're using as long as it's a quality project and has stability in the protocol itself.
Yeah, that's the truth. Okay, so proceeding to my next question. So how do VCs ensure that they are not perpetuating a bubble within the Web3 space?
I would say most VCs don't ensure that, right? They kind of FOMO into everything like everybody else, just with bigger checks side. Again, I would have to say that the easiest way to make sure that doesn't happen is having a market like this, right? Once this market happens, like I said, if they've got a portfolio of 50 and all 50 are in the negatives in terms of the return, now they're going to start changing what they look for, right? And so automatically that bubble's going to pop because they're looking to make gains long term, right? That's the whole point of the VC game, is to make long-term gains, to make everybody else happy, their investors happy. So I would say that the bubble has already popped. There is no more bubble in Web3 now because the funding isn't there, and so now you're getting, like I mentioned before, you're looking at real metrics, you're looking at real teams. You're looking at things that Web2 has been doing for decades that Web3 is now starting to do.
So it's not about being greedy, like one-time deal to score big bang, but rather you play it like long-term to provide a sustainable income rather than just one-time thing.
Yeah, and even if it's not income, it's still looking, if it's equity, it could still be 7 to 10 years out, right? I mean, that is the timeline for most of these projects. If they're going to IPO or if they're going to merger or be acquired, it's usually around 7 to 10 years. So that time frame, I think, has been harder in Web3 VC because of the token plays before. Once there was a token, it was released, you got immediate liquidity, right? So when there's equity involved, it's much different. So I think now you're getting another wave of VCs who got exposed to the 2020, 2021, 2022 hype, and those who have stayed in it, they're going to be much better off now going forward because the criteria has gotten better for them to invest.
So speaking about the future, so you mentioned like 10 years, don't you think that this lifespan for a project is way too overrated? Because we can see nowadays that many projects with tokens actually die after like crashes and bear market and something. And after 10 years, the crypto market will be completely different.
Sure. Yeah. Look, no, I still think it's worthwhile. I mean, if you look at Web2, how many companies succeed even though they don't have a token? They fail as well, right?
So that's a good point. Yeah.
Right. The point here is to find those who are going to have long-standing reigns in here. That doesn't mean your product can't evolve. Doesn't mean you can't add more things. Doesn't mean the team can go off and do something new. But the point is you want to support quality people in the space who can then go and change the entire space in the future.
So I think that's really interesting for you to say these things, because it really opens up a new perspective, for someone who's starting out like their investment way or just starting out with crypto. That's an interesting story to hear from like experienced VC representative. So my last question here for you would be as we've touched the topic of future. So what do you think, how do you envision the future of VC funding in the Web3 space? So firstly, in terms of the nearest future, after Bitcoin halving that everyone is expecting, and in 10 years or maybe even more.
Yeah, look, I think with the halving, everyone's kind of expecting there to be a big boom. There'll be all kinds of money that's going to flood in again. It'll be the same similar cycle that's going to happen. But I think there'll be different things that are going to be more attractive at that time. Not necessarily what we saw before in the last bull run are going to be, attractive now. I think capital will still flow in. In terms of the next 10 years, I think you're going to see it mature out, right? You have ups and downs when it comes to the Web2 market, but there's still always investing. There's still always funding that's happening. I think there's going to be less narrative of, oh, today's a bull market and tomorrow's a bear market for crypto. And the funding will just kind of be steady, right? As opposed to extreme in the bull market and then non-existent in the bear market. I think there'll be a much more steady factor.
But after 10 years, so it will be super mature in your perspective.
Not super mature at all. I think there's going to be so many things that we can't foresee. We can't predict. I mean, look, the rate at which technology moves in crypto, it's I always say, it's 6 months in the crypto world is 2 to 3 years outside of it. It just moves that quickly, right?
Can relate to that.
Nobody ever expected the NFT boom the way that it happened, right? So 10 years, we're just scratching the surface right now. But I think funding wise, I think that, people will be, okay, this is not just a bull to bear cycle. This is here to last. I think that will stabilize. But in terms of what we're going to see, I'm excited because I don't think we can even predict what we're going to see. So in your opinion, NFTs, GameFi, SocialFi will have a second chance pretty soon, actually. Yeah. Oh yeah, they still exist today. I know everyone's saying crypto is dead and NFTs are dead, but they're not dead. The technology remains, right? The type of NFT that maybe people appreciated before, maybe there's less of that going forward. But smart contracts, NFTs themselves, I mean, they're here to stay. They're not going anywhere.
Okay, so yeah, I think that's a perfect ending point for our today's talk. Really interesting to actually learn something from VC point of view, from this perspective and how they see things in crypto. I think many viewers could appreciate that. So, okay, guys, that was Ankur Pathak, Dr. Ankur Pathak from London Real Ventures. Again, thanks for tuning in, and just leave your comments in the comment section below, ask your questions, so we'll all be happy to answer that.
Thanks, Ivan. Thanks for having me.